Folks, you better get ready. Today we're diving straight into the heart of the market and the plays that are moving right now. And then we're going to zero in on one specific stock that is so cheap and so set up for success that early buyers could see life-changing upside. We're going to break it all down with evidence, real data, and the key strategies and risks to consider so you can make the call for yourself. This is not financial advice. The only thing I ask in return is simple. Hit that like button and subscribe so you don't miss the next big move. Let's get to work. First, we have to start with the bigger market picture. The AI space is on fire, and the headlines coming out of the last few days are almost unbelievable. Nvidia is planning to invest up to $100 billion into OpenAI as part of a massive data center build-out. OpenAI and Nvidia have announced a strategic partnership to deploy 10 gigawatts of Nvidia systems. OpenAI, Oracle, and SoftBank are teaming up on a $500 billion Stargate project to build 5 new AI centers. Oracle itself is preparing to spend $40 billion on Nvidia GPUs for a Texas data center. And to top it off, OpenAI and Oracle have a $300 billion Stargate deal to build AI infrastructure at a national scale. What does that sound like to you? It sounds like a giant circle of capital. OpenAI sends billions to Oracle. Oracle sends billions to Nvidia. Nvidia sends billions back to OpenAI. And around it goes. At every step, each company gets a fresh burst of excitement and a higher valuation as investors chase the story. It's like plugging a power strip into itself. As a kid, I used to think that would create endless energy, but of course it doesn't. You just keep feeding the same loop. That's what we're seeing now. A cycle of investment where every dollar feeds back into the same ecosystem. Some investors worry that this boom might not generate real output compared to the cash being burned. If any one of these major players decides to slow down, the entire loop could feel it. A single pullback could trigger a larger downside move because so much of the money is coming from inside this AI network. But here's the key. This spending is not fake. They are buying real assets, data centers, GPUs, software, intellectual property, and long-term contracts. Enterprises are locking in multi-year AI adoption deals, and these are not short-term experiments. Companies are building mega projects with heavy infrastructure and long timelines. Even if short-term corrections show up, the long-term payoff is hard to ignore. Productivity gains from AI are visible today and will multiply over the next decade. And when companies like Nvidia invest $100 billion into OpenAI, that money doesn't vanish. It comes back when OpenAI needs to buy even more Nvidia GPUs. Oracle builds data centers, OpenAI rents them, Nvidia sells chips, and the cycle continues. Smaller data center operators and GPU suppliers also get pulled into this tidal wave of demand. Every layer of the stack benefits. Hit that like and subscribe so you don't miss the next stage of this AI build-out. Now let's talk valuations. The stock market is priced in US dollars, and the dollar itself is losing value. The S&P 500 is up about 13% year to date, which sounds strong, but the US dollar has lost nearly 10% of its value against a basket of other currencies over the same period. That means a big chunk of your gains is simply your currency shrinking. Compare the dollar to gold, and it's even more striking. Gold is up over 40% year to date. If you hold only cash, you are quietly losing purchasing power every single day. This isn't new. Since 1971, when President Nixon removed the US from the gold standard, productivity and worker wages stopped moving in sync. Before that, when the dollar was tied to gold, productivity growth meant wage growth. Workers shared in the gains. After the gold standard was abandoned, the government and Federal Reserve could print unlimited money. Inflation quietly ate away wage growth, while financial assets, stocks, real estate, commodities, protected and multiplied wealth for asset owners. The rich got richer, not because of hard work alone, But because they owned assets that rose as the currency lost value, this system rewards capital and punishes wages. AI is now accelerating this divide. Automation will pressure jobs and wages, while the value of productive assets keeps climbing. If you own stocks, gold, energy, or other real assets, you benefit. If you only hold cash or rely on a paycheck, you lose. The lesson is clear. To protect and grow your wealth, you must own real productive assets. Like and subscribe so you keep getting the data you need to stay ahead. With that context, let's move to specific plays. One name that continues to dominate our radar is RGTI, a leading quantum computing stock. Quantum is in an arms race, and RGTI is positioning itself as a key player. Earlier this year, when the stock was around $8, we highlighted the setup and called it a strong buy. By June, it had climbed into the teens, and today it nearly hit $35 at its highs. This wasn't luck. We focused on 5 key factors: massive market tailwinds, technology leadership, a manufacturing moat, deep partnerships, and strong financial backing. Those pieces created a powerful setup, and the market is now recognizing it. Next is Lithium Americas, LAC. The Trump administration recently proposed taking an equity stake as the company renegotiates terms of a $2.2 billion Department of Energy loan for its Thacker Pass project in Nevada. This is a pure play on strategic mineral security. Lithium is a critical mineral for batteries and energy storage. AI data centers are energy hogs and need stable grids, which means massive lithium demand for grid storage. US government support here is about more than profits. It's about controlling the supply chain and avoiding dependence on China. When the government backs a company like this, private partnerships often follow, creating even more upside catalysts. Another monster performer is Robinhood, Hood. We spotlighted this stock when it traded around $18 early last year. This morning it hit highs around $130. Robinhood continues to expand its user base, diversify revenue, and deliver strong financials. Visionary leadership, a rock-solid balance sheet, and relentless innovation are driving exponential growth. Let's also revisit Alibaba, Baba. This stock was left for dead in 2024, but since March of that year, it has been in a steady recovery, up nearly 3x from the lows. Core commerce is resurging. Cloud computing is expanding. And with Jack Ma active again, investor confidence is rising. Even after the rebound, Alibaba still trades at valuations far below its true potential compared to US tech peers. Patient investors could see significant upside as the company fills in its valuation gap. Finally, watch HD, which is preparing to take terrestrial energy public. This nuclear play is one of only 2 stocks selected by the Department of Energy for a key pilot program. When we highlighted HD around $13.95, it was quietly building momentum. It recently pushed past $18, and the upcoming merger could trigger a new wave of demand. Investors often avoid SPACs before mergers, but government backing and limited alternatives make this a rare opportunity. All of these plays share one thing in common. They are tied to real assets, government support, or unstoppable technological trends. AI, quantum computing, lithium energy storage, next-generation brokerage platforms, and nuclear power are not passing fads. They are the backbone of the next decade of growth. Like and subscribe so you never miss these setups before they move. The bigger picture is simple. The US dollar will keep losing value. AI and quantum will keep reshaping the economy. Governments will keep pouring money into strategic resources. Investors who own the right assets will capture the upside. Those who sit on cash will watch their purchasing power fade. Your job is to position yourself on the right side of this shift. Own quality, own scarcity, own the future. That's today's breakdown of the market, the AI boom, and the stocks that matter right now. This is not financial advice. Do your own research. Hit that like button and subscribe so you stay ahead of the next move.